Hi, everybody. Today we're talking with Chris Marcus from Arcadia Economics, very well known in the silver space. Wanted to follow up with him on his thoughts. It's been a little while since I've talked with Chris, and if you're not familiar now, a lot of people are. Uh, he's got quite a background of knowledge in the space. 2 years at Moody's. He's got an MBA from Wharton. 7 years as an equity options trader on the New York Stock Exchange. And he's been with this Arcadia Economics, which he founded since 2012. Lots of opinions, lots of ideas. And listen, he's been right for a while now. And his silver position, I'm sure, is doing exceptionally well. Let's go find out what's driving this and talk some silver with Chris from Arcadia. Hey, everyone. It's a great pleasure to catch up with Chris Marcus from Arcadia Economics. It's been a little while, and we've been hearing nothing about silver, precious metals, but also the industrial use for silver with solar panels and whatnot. And I thought, who better than to reach out to Chris Marcus, who knows everything about silver, and has, you worked in trading, has worked on Wall Street, has worked at funds. I think that adds a especially critical aspect to when speaking to someone, is someone who's had that familiarity with the system, worked in the system, and now works outside of it. How have you been doing, Chris? I'm sure you're happy with what's happening with silver, and we're going to pick your brain as to your overall thesis, how it's going, and where it's going, and hopefully we can predict the future in some sort of way.
Yeah, Andrew. Well, it's great to be on the show with you, and it has been a while since we've caught up and done one of these, but appreciate you having me. And certainly, it's some exciting times as we've finally seen silver go over $30, well over 30, you could say, above 32.50 a couple points. Obviously, gold started the rally earlier, and about 23.60 today has been setting record all-time highs. And in terms of the silver side, interesting, if you don't count the few hours in 2021, this is the first time we've seen a silver price above $30 since, I believe, January of 2013. And really only the third time in history. You have 1980 when silver went up to $50. You have what happened in 2011, a couple hours in 2021. But certainly, I think it's a nice, I don't know if you appropriate to call it a historic event, but certainly for people who follow silver, this is a significant one, especially given how much we've seen silver in the past couple of years just touch up, get to $29, get close to 30, and obviously in today's world where you have a lot of technical trading and algorithms, a lot of resistance at that $30 level, but certainly to see it break through, and we didn't have it break through and then come back down, but actually met all of the anticipation we've had for years. When it broke through, went up to $32 pretty quickly. So yeah, it's certainly a nice time in the silver world. I know as you dig into, we're now starting to see that reflected in the silver mining equities too, and gold stocks as well. So certainly for people who have been waiting and seeing a lot of the conditions that would suggest a higher silver price, we can also dig into some of the supply and demand fundamentals where the solar panels have really been driving what appears to be a growing deficit. So a lot of factors coming to a head. It's no longer the guys from 1990 or 2000, 2010 saying one day, watch out, this and that might happen. I mean, we're seeing a lot of these things play out now, and certainly to finally see the gold and silver prices reflect that has been an enjoyable time, and I think a lot of people in this space are feeling that way.
Well, especially someone who's been so vocal for years about silver and a real silver bull. I think it was Silver Fest was the last time that we talked as well. So, I mean, when you're reaching out to someone who knows all things silver, it is you. And yeah, maybe false starts in the past and the narrative in the past, and people kind of say, "Oh, well, when's it ever going to happen?" But really, truly, today, we have that, like, that whole brew of things that are happening. Whether you want to look at brics and the US dollar, it's struggling, let's just say, even though, I mean, it's up today, but but in regards to what, we can see a lot of these other nations that are separating themselves, they're looking towards commodities, whether it's gold and silver. So there's that play on the kind of political front, on the brics kind of side. And of course, as you mentioned, the amount of silver required for any of this solar panel green future engineered future kind of thing, that's a lot of silver. And to throw one more thing into the mix, there was that whole issue in Mexico too, where the past president, there's a new president now, had come in, said no open pit mining, put a damper on a lot of exploration. That would have put a big hit too, because silver is, I mean, Mexico is such a silver producer. So that being said, as you said, lots of things on a big scale that are coming together that aren't just in a tabloid type of story. It's like, no, this is in geopolitical news. This is all happening. And that's what makes silver so unique, is that it has a little bit of all of that mixed together. So why don't you take a chunk out of the first piece? I know like one of the mottos in our Arcadia Economics is like watching the fall of the US dollar. So maybe we'll start from there.
Yeah, well, interestingly, like you point out, this is one of the times where we actually have had the higher interest rates, which I think has had a lot to do with the dollar being higher. As of 2 months ago, I believe it was 10 of the 11 major central banks were expected to cut this year. So we're getting back to that cycle where there's going to be easing from the central banks, although with the US not pivoting yet, we haven't had that rate cut. As I know you and probably most of your listeners are well aware, coming into this year, 6, 7 rate cuts were forecast. And now there's even discussion about whether we will potentially need a rate hike. And it's a little, maybe more than a little concerning when you think about how now under the higher interest rates, you have the US debt interest expense blowing out and going higher. And a little bit of a scary debt loop that we're seeing on that side. Yet, perhaps what's been interesting about the rally this year is that gold and silver have surged. Silver, I think it's up about 45% since it began its rally. And this has happened in the face of inflation staying stickier than most expected. This has happened in the face of the Fed saying, well, we're not going to, suggesting rather that we're not going to be cutting interest rates soon. So it's interesting to think about what has really driven this. I think in some ways there's a degree to which if there's ever been a market that doesn't respond on a linear day-to-day basis the way perhaps we think it should, that would be gold and silver. You talked about the growing demand for solar. And actually, if you've not seen it or anyone watching this hasn't seen it yet, Chen Lin has been doing a couple of interviews in the past week where I think he has some closer sources in terms of the photovoltaic demand from China. He was looking at how many solar panels are being produced, how much silver is going in. And he said, based on numbers that are coming out already, we're looking at a 56% increase in solar production in China this year. So last year was a record year. I saw some data last week that shows we're already above 50% higher than the first quarter from last year in China production, and Chen Lin is his numbers suggesting could be an increase of 56%. So if we already have a deficit, and I get it, there's some variability to the numbers and that it's a bit of an imperfect science, although if you look at what Silver Institute put out, and really the main contention about the Silver Institute numbers is most people feel the solar demand would be substantially higher. So whichever numbers someone chooses to look at, they're all showing an issue here. I think that's been reflected where you've seen decline in the inventories ever since all that metal, the gold and silver, flowed over to the US following the EFP crisis in 2020, especially if you market to the silver squeeze in 2021. You've seen inventories in the COMEX registered go down. LBMA has gone down, Shanghai Gold Exchange has gone down, Shanghai Futures Exchange has gone down. So certainly would fit with what we've seen of a deficit in the market, bringing the metal from somewhere. And then if you add, again, we cited a couple Chinese numbers, was reading that the US basically planning to double, forecasters saying they will double solar installations in 2024. So it's going up there. So India is beginning to ramp up their solar program. And then you have this at the same time where, as you well know, it's been a pretty tough time, especially on the junior side, but silver space in general. So starting to see that change a little bit where there's money flowing into the sector now, but it's not like you have a mining bonanza that's already underway and in full gear, which again, this is a lengthy process. We're not talking about if you had $100 silver tomorrow, it's going to take years before you get silver, at least from the mining side. To balance that, I think something worth pointing out is that we have been seeing a fair amount of retail silver selling.
Yeah.
And if you get to $50, I would imagine there's a handful of people who've been holding silver for a while that will sell. And there's been about 3 billion ounces of silver purchased since financial GFC in 2008 by retail. So there is some that has started coming online. There's some more that could come online if you get a price above $50. Is there silver and tailings projects that could come online? Yet the mine supply is going to take a while. And also, when you think about it, if the deficits really are about 200 million ounces, it's not a small amount. Where I believe First Majestic is going to produce, they're on guidance for 9 million ounces of silver, not gold and silver equivalents, but 9 million ounces of silver. It's not like you have a bunch of companies that are cranking out 40 or 50 and they can ramp up some extra ore through the mill. Then one other thing that I think would be insightful, there was an Oxford economics study on the forecast of industrial demand over the next decade. And they came back, and again, granted, what's going to happen over the next decade, perhaps more than ever, I would suggest the world is likely to look a little or a lot different. What role is AI playing in our life? Things like that. Yet, with that said, they came back suggesting a 46% increase in industrial demand over the next decade. So you add all of those things together. This is leaving aside the potential for QE or deficits that are going forward in the US. And certainly there's a bit of a gap there. Now, why did it start happening now? I mean, these things have been in place for months and some of those things in place for years. Yet, I think there's a degree to which at some point it has to move. And maybe this was just what was happening in the beginning of this year, February into March. Although I think particularly in silver, probably, and you look at the way they unfolded, I wonder if there's some price that gold gets to where you just can't have silver at $22, and that naturally lifts things up. And the other thing I would suggest, at least in my mind, has had a big impact is really the escalation of the sanctions and this Russian money that was frozen before, now talking about seizing it. And there was even a tweet from the State Department where they're almost like celebrating it. I think the escalation of that, I mean, it was right when Russia got kicked out of SWIFT and had these assets frozen. That's when the central bank gold buying began. And now we've seen Russia start to sanction JP Morgan and a couple of other banks.
Yep.
How does the US respond? They sanction Chinese companies that they say have aided in the Russian war effort, put tariffs on China, on green agenda products, ironically enough. I think there's a degree to which this is building. And if you want, we can dig into a report that came out about something called the unit, which suggests that now we're not just talking about, well, maybe Russia and China will do a settlement currency, but now it's on the docket at the BRICS Business Council. So at some point, this, I would suggest, had to happen. Then, of course, there's the other bucket of what happens when some of the borrowing and spending from the US becomes an issue, or some of the other governments becomes an issue. But long answer, but hopefully that puts in context of some of the things that may have been driving it in an environment where yields and a lack of a pivot should have been suggesting otherwise.
Yeah, I mean, it's certainly, there's so many factors all culminating together. And I can't keep out of my head too that great reset idea too, where you think they're printing all this money, it's unlikely ever to be paid off. You'd have to have some dramatic situation either created or you know, and if you're the one creating the problem, you're the best one to solve the problem usually. That group usually has a solution in mind whenever they create the problem. I know that you know, we'll look at like Goldman Sachs and JP Morgan and even Sprott. Sprott, I think, has a 20% demand you know, requirement by the end of 2024. Even that's being very conservative. So we see that silver has a big upside, and it is interesting that following all of these major geopolitical kind of moves as well that are hard to keep. Like it's a head scratcher, because I look at it from any angle. If someone decided to come off the US dollar 10, 15, 20 years ago, you're going to get a visit from the military. Like, it's not going to happen. Now it's an open discussion, as some people might dismiss it and say, oh, it's not really going to happen. I think it's more than on the table. And there's even hints, like you said, in this October-November meeting, there's going to be a very crucial announcement. And it's not like anyone's getting along any better. I mean, we're not, the US isn't getting along any better with Russia. The China thing's pretty tense. And this lead up, if you're trying to do this green agenda, they've left it so late to attempt to go, well, let's build up all these chips and chip manufacturing. Okay, that's going to take a bit of time. And then also, oh, oops, we don't have enough uranium. So if we want to do the nuclear thing and we're going to shut down Russia, what do we do there? If we're going to build out all of these solar panels, where are we going to get our silver? A lot of these things really haven't been thought through very well.
It seems to be heading towards a perfect storm, at least for silver. Hesitate to use that word perfect, because a lot of the things that could be driving, or have been and could continue to drive gold and silver, are in many ways not ideal for mankind. Last week, there was an announcement that Biden is giving permission to Ukraine to begin striking targets within Russia. I'm not sure why Biden is making that decision, yet I think we can extrapolate. So it's almost as if the things that Putin comes out and says, if you do this, this is where we're really going to have an issue. That seems to be what's happening. Talks of France and others sending NATO troops into Ukraine. So it's some scary precedents in many ways. And Andrew, I'm going to pull up something that I would suggest people at least be aware of and
Yes.
look into. It's something that I had someone alert me about a couple of months ago. It was a white paper for something called the Unit, and basically the person I was speaking with had done a lot of research on Enbridge as well and how things are coming together. And he felt that basically this was the plan that was being pushed forward, and was, here is an article from Pepe Escobar that came out a couple of weeks ago. Welcome to the Unit, a concept that has already been discussed by the Financial Services and Investments Working Group set up by the BRICS Business Council. So some of your viewers might be familiar with Pepe Escobar, certainly a good reputation as a reporter. And what I found interesting, here comes the clincher. Unit has already received backing by the BRICS Business Council and is on the agenda at the meeting in Russia next month, with possible adoption as early as 2025. So suggesting this isn't just something that's being informally discussed, but now being discussed officially by the BRICS. It also talks in there about how we have a 40% gold backing and a 60% backing of local currencies. So again, has this happened? No. Can we know for sure that this is what they're discussing? Perhaps not, but certainly you're going to start hearing more about this. And when you look at the way the geopolitics are going in the world, it's not surprising. This is something where you've seen the various signs, you've seen it building, you've seen the way the various parties are interacting. And like you said, it was a long time ago, things like this didn't get discussed, yet that we're in this environment, that we've seen central banks and perhaps something that just came out in the last couple of days, India repatriating their gold from England.
Yes.
And then we found out from World Gold Council, they've also purchased more gold in the first quarter than they did all of last year. Of course, India has also imported more silver in the first quarter than they did all of last year. So I would suggest these things aren't all unrelated. We can see that something is happening, and you can see why it's happening. And you can see now that the gold and silver prices are reflecting that, and yet certainly leaving us in a condition where there's still a lot of things that can happen. I'm careful not to say, all right, we have a silver shortage coming. A lot can change. it becomes harder to see what specifically could change that would divert us from the path that we're on. But I mean, you can see a sequence of events where you add the supply and demand. Another thing I was thinking about is that if we do get into even an official recession, perhaps even more so if we get into an official recession, we saw a couple of years ago during the inflation crisis, what was one of the things that the government here in the US and other places did? They did a big, they called it the Inflation Reduction Act and did a big subsidy for solar and green agenda products. So if we get into a more overt or officially recognized recession, does the government stand aside and let that happen, or do they respond similar to COVID, which we saw a response from Trump and Biden of spending a lot of money? So
Yeah.
not a party thing, but I would think that in that type of environment, then if you think the government would wanted to pump money and stimulate the economy in the face of what they're talking about with the green agenda, that there's a pretty darn good chance that there would be more money going into that going forward. So you lay all these things out here and you don't know exactly how the future is going to unfold, but certainly leaves a good picture, let alone fact now we have Costco selling gold and silver and what happens. All of this is without mainstream physical. US is the leader in investment demand, and we've seen more selling. There is still buying, but we've seen more selling on a retail level than any time I can remember in the last decade anyway. So if you have that side flip too, in terms of retail, and as I think you and I discussed before, there's been a lot of banks have been publishing reports. There was TD Securities worrying about another silver squeeze. UBS put out a $36 silver target. Citibank's upgraded their targets a couple times this year, yet they've mentioned $3,000 gold. So I mean, this is being seen by institutional, and we'll see what the timeline is. I think there's a lot of institutional and even gold and silver investors in retail that have that. All right, we've seen prices go up before and then the rug gets pulled out. So I think there's hesitancy on that side, yet the message is getting out there, and a lot of the things that you and I have talked about for years, and now we're seeing some of the banks talk about those same things. So will be interesting to see what happens if you really get US institutional and retail. Will that be when you start crossing certain levels? There's that degree to which there's always the momentum trading. And
well, that's interesting too, because you've talked about let's pick on JP Morgan a bit, but there's lots of manipulation and spoofing whatnot, and specifically silver in the past. Now that's being cleaned up to some degree. You would know specifically, because I mean you've covered this pretty diligently. Any attempt of any of those kind of banks to quiet this down obviously have failed. So I mean it surged past. So I'd love to take your take on that. It's whether they're like, well, we can't hold it back anymore, let's just join the game. I don't know. What do you think?
Well, that's a great point, because the other thing that makes this so unusual is that you've seen this rally in the face of a growing short position by the banks. Now, again, there's the caveat that there could be some offsetting positions in London accounts. That's possible. But at least from the pattern we've seen over the past couple of decades, really, of price goes up and the banks get more short, and then usually there's the reversal and those positions switch. And there's a really large, about 40,000 contract short position on silver held by the banks. And yeah, interesting to see which way we go from here. Is there the potential for a short squeeze? Yes, there is. And I think that's a degree to what we saw at the tail end of the 2011 rally. So, or is silver guaranteed to soar in the near term to 50? No, it is by no means guaranteed. But are some of the conditions in place where something like that could happen? Yes. I think all of these conditions we've been talking about facilitate an environment where someone could get caught off sides and you could have something like that. So,
and in the world of what else, I'm going to throw this one out there too, because I got to speak with Andy Scheckman about 10 days ago, and that was excellent. Okay. That was great. How about something like, okay, say a lot of these investment banks, and certainly Canada, because we've got nothing. Like we got rid of all our bullion. The Canadians don't, like, we don't have any gold storage at all. I don't mean retail. I don't mean like there's lots if you want to go get some, but I mean the government, the federal government. If there was a notion of, okay, the BRICS are going this direction, they're going to commoditize. They're going to look at physical commodities as being a backing towards some sort of brick solution, the unit. And maybe the Western eye size will be some sort of crypto, the Fed coin, XYZ, blah, blah, blah. So if there is an ongoing conversation in those investment banks and trading platforms that it's in your best interest to not be involved in the commodities, precious metal side, and have kind of like financial warfare, like we see, like, legal warfare going on across the states and Canada as well. What do you think of that kind of narrative, that kind of story? Do you think that if they're going to protect their solution being more of a crypto backed Fed coin, that's going to be a fiat type of a number on a screen, and they know that BRICS is happening, they're going that direction off of some sort of commodity asset. If they were to protect themselves, they would want to short that. They would want to do harm or damage to that side, and also build up that narrative and try to suppress it as they're trying to build. Would be like, no, that's the past. This is the new solution. It's going to be this Fed coin that's backed by, I don't know what it's going to be backed by, but do you think that kind of story, that kind of fight, do you think that's there?
I think that's a real concern because there's a war for resources now in the middle of a plan that the main premise is to go green, which calls for a lot of metals. And I mean, you see China going out and acquiring resources consistently. Obviously, the gold that they've acquired, but especially when you consider that the BRICS countries currently, and that's a list that is going to be growing, in my opinion, but currently there, I believe it's 51% of oil exports are from BRICS nations. So in an energy-dependent world, if one side has gold and silver behind something, and here you have paper or a token behind it, well, that in itself is a pretty important thing to be aware of. Yet, when you look at what's happening, just the hostility of the relations, where sanctioning China, raising the tariffs, and one can agree whether or not that's right or not. Yeah, it doesn't leave me feeling great about. I'm thrilled with the governmental decisions that my country is taking. It's concerning, and it's such a weird space, a gold and silver investor, where you see these things that are happening, and there's the part of you that wants to invest well and see your thesis play out. Yet at the same time, so many non-ideal effects in terms of how people are living and what's going on in the world. Yet I guess that's part of the challenge, is assimilating all that together, and then you make the best decisions you can. But yeah, it's a trend that is not a good thing, in my opinion.
No.
And actually, one last thought to that.
Yeah.
Is that note I know a lot of people have heard from Zoltan Posar, where he talked about it's going to be a process, not an event. And when you think about what the process might look like, these are the things that are happening. This is what you would imagine. And when you think about, based on what's happened, what is likely to happen next, it seems to be heading further down that pathway, in my opinion.
I agree. And also the mixed feelings is that, especially someone like yourself for years who's been like screaming out to anyone who'll listen, that's the one way to give back and to try to get people to go, listen, I'm not the bearer of the most happy news as far as the West. And for what goes for the US goes for Canada as well, that here's a solution to protect yourself and gives you some optionability. But, I'm right. And one can feel vindicated up to this point, and it certainly seems like it's going this direction. But at the same time, it's like, well, who wants to be right whenever it's like it's the destruction of of nations into some degree? And that's what we're seeing. We're seeing a fundamental breakdown socially, economically, fiscally, responsibly. I mean, it's there's so much happening that is a head scratcher. That it's when you have that many head scratchers in you, it would also make sense just to me psychologically to go, what's safe? Like what, and that's what there's a great, push for gold, silver, is that it just is like, I'm just going to run to that. That just makes sense to me. And then because it has an industrial use, even better. But it is challenging, those mixed feelings of living in a time whenever it's you're seeing a lot of these culmination of things that make sense for your thesis, but it's not a happy thing.
No, it's not. And I think that's one of the challenges of being aware of some of these things. Yet I guess that's part of investing, where it's looking at the way the world is changing and adjusting yourself to that as best as you can, whether that's on an investing level, a personal level, what someone chooses as their occupation, where they choose to live. So I'm sure people have always have heard those stories about how even in the Great Depression, there were people who made fortunes back then. And,
Yep.
you could, maybe there's that balance of you control what you can and be a positive influence in the ways you can. And also within your own ethical code, taking, maybe not taking advantage is the right word, but positioning yourself so the things that you see happening, being prepared for that. Maybe someone wants to get involved in AI, and you can separate the investment component, but maybe they are enjoying learning about it and seeing what can be done. And that's, so these things are going to change. It's like when the Home Depot, the Walmart comes around, what happens to the local mom and pop shop?
Yeah.
Well, sometimes they do or they don't make it. And some of these things change and we adjust and prepare as best as we can. But yeah, it can certainly be heavy to, and I think about that a lot, where it's like for the last 15 years, after I saw the response to the housing crisis in 2008, being concerned about a lot of these things, which some of which have happened, yet I think there's got to be that balance of also enjoying and finding joy in what you're doing each day and living and appreciating things, and then also being prepared for certain things and having a plan in place for wherever someone's at that matches that. And but yeah, in this space, it can be a lot to handle mentally, although hopefully by the time some of these things play out, or some of them already starting to, that a lot of the thought process that you've gone through by that point can come in handy then.
And once again, we always kind of look at the mindset of people as well when we're talking about trading. And we look at investing in trading and the stock market as just another kind of metric to test oneself at. Some people use sports and athleticism. Oh, I'm going to be faster at the marathon or whatever else they're working on. And that's the way they challenge themselves every day. I find that the market is no different. Those that really apply themselves and they want to understand a narrative and they look into things, it's a way to test your curiosity, the way you're thinking. So there's lots of positive in that. And just as if someone wants to go out and say, here's a healthy diet, doesn't mean that 80% aren't going to follow it. A, they won't get the news. Two, they're not that interested. So at the end of the day, we are responsible for ourselves. And what's more important on that is that you're one of the ones who's heralding the message, getting it out there to anyone who will listen. And that is something to be commended on. I want to wrap it up though, and we don't want to talk necessarily about stocks all that much, but I wanted to throw in an interesting idea that maybe wraps in how money can come into some of the even bigger producers, midstream producers, and even an explorer is, if you're a BRICS nation, or if you're a country that says, I recognize what's happening here, and I'm a fund, or I'm a this, I'm a that. Do you think it's possible in any worlds where they say, I'm willing to fund even an exploration company that's near term? Like, it's not 20 years away. It's like you've got a discovery, you're kind of near term, but in that, what I'm buying is I'm buying production. So I'm buying your future production today. So do you think that's possible where funds go, yeah, listen, if I think you're 5 years away from production, I'm buying that production and I'll store it. Like, we're going to use it, or I can off take it to someone else as well. But do you think that's a way that you can get money into this system without it necessarily blowing up the capitalization or the share structure, but also where bigger funds can go? How do I get access? How can I get my hands on more gold or more lithium? If it's not today, in 5 years, do you think that's in the realm of possibility?
There was a story that came out last week where the U.S. has been putting money into Canadian mining projects.
Yep.
We're already seeing that happen. Now, in terms of will they go to producers or company or end users or governments, I wonder if the question might be more if the producers would want to do that. Keith Neumeyer's talked about how he's received calls and
Yeah,
they don't want to lock something in. So I could see potentially some countries or companies perhaps locking in the supply, maybe not having the or I mean, I guess you could hedge the price on the COMEX, so there is a way to do that.
Yeah, but I'm
But
just
yeah,
thinking from if you're a junior and you're kind of over a barrel because the junior markets are pretty tough, and someone sees an excellent project, they go, it's a long way off, but we can kind of bully them into taking some money, and we could take production. If you're a junior, you might go, oh, that sucks, and that might hurt someone from buying us. But at the same time, producer's not offering us 50 million right now.
yeah, again, you have the conditions in place that could certainly head us towards there. And was an interesting note from Peter Kraut in an interview he did about 2 months ago. He said he was at PDAC and he was talking to a silver producer, not from North America, I believe. And he said that they were talking with some of the traders in China or the industrial users, where right now you have the premium was $3, has been closer to $4 over the spot price in New York. And he said they're basically saying we just want the silver as quick as we can get it, and they're trying to lock things in 3 weeks in ahead. So I don't think we've come to a panic point yet, but you starting to hear things like that happen where people are getting concerned about the supply. And the other thing Chen Lin mentioned in that interview was that Microsoft just launched a new solar facility to provide the power generation for their AI group. So yeah, I think we could see that happen. But the fact that the U.S. government was doing it, perhaps that's the best indication that we've seen. And I would expect similar things like that to continue going forward.
Excellent. Well, listen, this is, even if it's stressful and chaotic, which I say all the time, and sometimes it can be overwhelming to people, what a time to be alive. This is truly a time in history. I mean, when I take a step back, I think it's not boring, that's for sure. So it is, and it is refreshing, like I said, to see a lot of this thesis that you had, unfortunately, but also fortunately, coming together. And it's that foresight that keeps the brain active, curious, and also leads followers and subscribers to you that appreciate hearing this message. And we always love talking to you, Chris. Appreciate your thoughts and insights, and we look forward to catching up anytime you want.
Well, I sure appreciate that, Andrew. It's always fun talking with you about these things. And hopefully one part that's been nice for gold and silver investors is you've gotten a little bit of that, when is this ever going to happen? At least there's a chunk of that removed. And yes, it's certainly interesting times and seeing what's happening. Hopefully this helps to put things in perspective and at least balance it so you can be aware of it. Doesn't have to be dwelling on some of the less than ideal things happening in the world. But again, I think the best we can do is look and see what's happening. And once you start with that, usually there's a way to handle or find opportunity or just keep yourself out of harm's way. And anyway, hopefully this gave a few things to think about. And yeah, I'll have to have you on my show soon, Andrew, so we can continue this and get your perspective. So
Absolutely.
Anyway, thank you for having me here. It's fun to get.
No, we really appreciate it, Chris. Thanks so much. And we'll talk to you real soon. Take care.